Good morning, everybody. We have a higher trade in the grain markets here early on Tuesday morning. It is 6:30 a.m. Central Time. December corn futures up 4.5 cents at 420 and three quarters. January soybeans up 59 and a quarter. December Chicago wheat up 1 1/4 at 599 and a quarter. December Kansas City wheat down 2 1/4 at 555 and three quarters. December spring wheat down 1/4 cent at 554 and a quarter. We actually saw some gaps higher in the corn market and also in the soybean market on the open last night. U.S. processors crushed a record amount of soybeans in October. NOPA pegged the October crush at 185.2 million bushels. That was the best for any month on record. It exceeded all pre-report trade estimates. The previous record was 181 and a half from just this past March. USDA projects that demand for U.S. soybeans via domestic processors will be record high this year and will account for about 48% of all demand for U.S. soybeans. Exports account for 49%, and then you've got a couple percentage points in the middle there. But despite the big run-up in soybean prices, we still have very good crush margins, and that is obvious based on the very, very strong record crush number. U.S. row crop harvest is wrapping up. U.S. corn crop is 95% harvested versus 91 last week and 87 on average. The soybean crop is 96% harvested versus 92 last week and 93 on average. Some areas of the eastern corn belt, maybe southeast part of the country, have been kind of slow relative to central and western portions of the corn belt, but this whole deal will be all done in the next couple of weeks. Fund traders remain heavily long the grain markets. CFTC released its weekly commitment of traders report yesterday. This was a delayed report because of the Veterans Day holiday. Fund length was actually not quite as large as some people had expected, but the positions overall are historically large. At yesterday's close, private groups estimating that funds were net long 253,000 contracts of corn, net long 233,000 contracts of soybeans, and net long 27,000 contracts of SRW wheat. So even though the positions were not necessarily quite as big as some people had expected, these are still very hefty long positions for the funds. Funds have been net buyers of soybeans for 13 straight weeks, which is really pretty phenomenal. The S&P 500 posted another all-time high close yesterday. The benchmark U.S. large cap index has rallied 12% from its October 30th low and has rallied nearly 8% since election day. I think that these vaccine prospects from several different companies now have helped to boost the market despite talk of additional lockdowns and restrictions. And as I discussed yesterday, there are already a lot of big cities and even some more rural areas that are going back to stricter mandates and that sort of thing. But the stock market acting very well. It is a little bit lower here this morning. U.S. winter wheat conditions improved last week. Crop is rated 45% good to excellent nationally, up from 46 good to excellent nationally, up from 45 last week. Still behind the 54% average. Ratings in your key HRW states, Texas, Kansas, Colorado, Nebraska, Oklahoma's improved a little bit, but ratings in those areas continue to struggle because of this drought that's really been building and pushing from west to east. Those ratings are kind of offset by better ratings in some of your SRW areas, some of your areas in the Northwest. That crop is 96% planted nationally versus 93 last week, ahead of the 94% average. 85% emerged versus 79 last week, 84 on average. Remember, December grain options expire on Friday. If you have remaining open positions there, make sure you take a look. Corn markets acted very well. We gapped higher on last night's open. I've heard a little bit of chatter regarding potential Chinese purchases late last week and into early this week. Nothing's been confirmed. We'll see if we hear anything in regard to confirmation here the next couple of days. They've taken some carry back out of the market. We've kind of gone back and forth here. 7.5 cents from Dec to March this morning. That spread was as wide as 10 cents just a couple of days ago. So if you've got some existing December sales or HTAs that you're looking to roll, you've got to keep an eye on these spreads here because you're very quickly running out of time. Soybean market also acting very well. Fresh contract highs overnight for the nearby January contract. Export sales have slowed a little bit. Shipments are very good. Shipments were toward the upper end of expectations, according to yesterday's export inspections report. Again, domestic crush is just phenomenal despite these high prices. Your crush margins are still very good. This bean deal in particular, and really corn too, these are really demand-driven bull markets, and we haven't seen a lot of this stuff over the last 10 years. Most of your rallies the last several years have been supply scare rallies that were short-term in nature, that were not ultimately realized. You'd have a summer weather rally on a dry forecast or something along those lines. But we haven't really seen a demand-driven rally like this in a while. And these demand-driven rallies are most often more sustainable. They last longer. They've got more legs than the run-of-the-mill supply scare rally that we've seen just about at some point almost every year. Wheat futures kind of mixed this morning, unable to follow the row crops higher. We've still got weather issues here in the U.S., weather issues in Russia as well to keep an eye on. Cattle market was a mixed bag yesterday. Cash cattle was better last week, and we'll see if we can build on that here this week. Head of the cash open, the Dow Jones is down 180 points. S&P is down about 18. Bonds are up a little bit. U.S. dollar is lower. Crude oil is down 13 cents at 41.21 in the December WTI. Precious metals are mixed. If you'd like some more information, visit my website, www.standardgrain.com. Go to that website, click on Grain Marketing Plan. If you would like to know when, how, and specifically I am pricing corn, soybeans, and wheat throughout the year, check out that subscription service. It's $49 a month. It's billed through PayPal to your credit card automatically every month, and you can cancel it at absolutely any time. So it's a very easy deal to set up. Again, no other fee, no other obligation. You don't need a trading account to participate in that at all. I'll be hosting AgriTalk again today at 2 o'clock Central Time this afternoon, so be sure to tune in to that. I will talk to you a little bit later.